What is going on, guys? My name is Andre, and today we're going to be talking about Uber. So if you're a shareholder of Uber or thinking about investing in it, you should watch this video. So I got a lot of things to show you guys. We're going to be going over one interview about the CEO talking about the Robotaxis, and I'm going to share my thoughts on that. We're going to go over the Q3 presentation, the SEC filings. We're going to be going over the discounted free cash flow valuation. We're going to be talking about everything you need to know. So right here, the stock dropped 10% when the news came out that Waymo won't be keeping its partnership for the Miami expansion in 2026. So I think that is way oversold. We're gonna be talking about that later. But at a technical analysis, what I'm looking at is like the worst case scenario is it goes down about another 8, 9, 10%. And the best case scenario is that it goes up 40% back to its highs, which I think it will. And if you look at the underlying company, how it's been doing, we can see that the revenues and free cash flow has been amazing. I was ignoring this company back here because I didn't think they would ever be profitable, honestly. And they proved me wrong. They're growing their free cash flow at 30%. So the company's growing like crazy. And if you watched Parkev's video, he gave it an intrinsic value of about $114, which if you look at this chart, it kind of makes sense. Usually the company stays with how the revenue grows, the stock price goes as well, and that has not been the case with Uber. So I think there is a lot of upside for Uber, and I think over the next 3-4 years, they will be doing exceptionally well. So before we get into the juicy stuff, guys, I want to show you guys this video about the CEO posted by Quality Investing with Arya. That guy's awesome. Check him out. But let's see what the CEO has to say when he was asked about Robotaxi and how it's going to impact Uber itself.
I think first is that it's not a binary outcome. Okay. I think that a Waymo app and an Uber app can coexist. We saw it in my old job in the travel business, right? I ran Expedia, and there's this dramatic, is Expedia going to put the hotel chains out of business, or the hotel chains going to put Expedia out of business? The fact is both thrived. And there's a set of customers who books through Expedia. There's a set of customers who books Hotel Direct. And both businesses have grown, and interactivity in general has grown. Same thing if you look in food, right? McDonald's has its own app. It's a really good app. It has a loyalty program. Starbucks has its own app, has a loyalty program, yet both are engaging with us through the Uber Eats marketplace. So my conclusion was that there isn't an either or. I do believe there will be other companies. There'll be cruises, and there'll be WeRides and Waves, etc. There'll be other companies and self-driving choices. And the person who wants utility, speed, ease, familiarity will choose Uber, and both can coexist and both can thrive, and both are really going to grow because autonomous will.
Thank you very much, Dara, the CEO of Uber, guys. Give him a round of applause. So the thing is, Robotaxis are coming in autonomous vehicles, and they are going to be using Uber because Uber built such a huge, successful infrastructure and has so many people using Uber that it's way easier for Waymo to go on Uber app, which they have been doing, and get customers and rides through there instead of getting people to go on their app alone, because that's going to take a lot of marketing and sales to build people, and they're going to have to work a lot on the app, loyalty programs, all this that Uber has been doing for years and years. So Waymo, Google's company, which I talked about them a lot in this video if you want to check it out, and they have been growing very quickly. But I think it's the reason I believe they're stepping away from Uber because they are so expensive. They're not profitable. Their hardware for autonomous driving is very expensive, and they have bad margins. So I think that's one of the reasons they want to step away from Uber so that they make a little more money. But for Uber, autonomous vehicles are even better because their main cost is paying the drivers. Now, if you take away the drivers, all they have to pay is for the infrastructure to keep running and for the autonomous vehicles to do everything for them. So their margins will actually be even better. And the next thing is Tesla. Of course, Tesla's robotaxis. The thing is, there's videos of Elon Musk in 2015 saying, oh, within a couple of years, robotaxis will be a thing. It'll be huge. And we see the same thing he's saying right now. By 2026, robotaxi will be here. It'll be awesome. But it's just a slow process because autonomous vehicles is a very complicated thing. And for them to get permits as well at cities, and it'll just be a very slow thing at the start. And I think hopefully Uber can even get a partnership with Tesla for the robotaxis. All right, guys, institutional investors have been buying up this company, and so should we. I think they see the opportunity. that is clearly there. So let's get into the presentation. One of the recent things Uber has been doing is growing their subscription-based program, which I love. I love subscription-based businesses because it's constant, it's sustainable, and you know how much money you will earn. And we can see that the subscribers spend 3 times more on rides. They're 30% of the gross bookings, and they have 3 times the members since the end of 2021. And this is kind of what the CEO keeps talking about, the organic growth. They're trying to grow the infrastructure for the users by doing multi products, more services, and we can see it's working. In 2021, the beginning, 21% of the users only used more than one product, and now it's 34%. And users that use more products, they spend 3 times more money. So this is how Uber is kind of building their moat. They have a lot of different businesses. They have Uber Health, Uber Direct, if you only need your key picked up from your house. They have advertising, so they get advertising because for example, Uber Eats, if you're a restaurant who uses Uber Eats and is on there, you can pay them to take off the bad reviews, to promote your thing more, to do that's another revenue stream from Uber. And the big thing is they're going international. Daniel Pronk also made a video about Uber. You guys should check it out. He talks about the same things kind of I'm talking about. But he said how in Mexico he used Uber, and I'm from Croatia, guys. And when I go to Croatia, to Split, which is just booming with tourism, everybody uses Uber. So right here we have the 3-year outlook. So for the next 3 years, they expect their gross bookings growth, so pretty much revenue, to be growing mid to high teens year over year, and EBITDA grow from 30 to 40% year over year. And what their goal is right now is to have 90% of the EBITDA turn into cash flow, which is going to make it a lot more profitable. And right here, we can see the profitability is growing. It went from 1.5 billion in 2018 to 5 billion in 2023. And the last 3 months alone, they did $1.7 billion in EBITDA. In the same time, the gross bookings are growing like crazy, and they are in over 70 countries right now. And if we're talking about robotaxis and autonomous vehicles, that's going to be in United States and Canada first. It's not going to go in Brazil or Mexico, France, or Spain. And if you look right here, we can see that in Q4 2021, which is the dark blue, how much revenue they got from those countries and how much they gained in Q4, how much they have right now in Q4 2023. So they have been growing internationally, double-digit growth. Sorry, scratch that, double-digit growth. In South Korea, they 10x the revenue since 2021, Argentina 11x, Japan 2x, Italy 4x. And this is what they're trying to take control of with the subscription model. 50% of their consumers only take 1 to 2 trips a month. They're trying to scale this. All right, we're back to autonomous vehicles, guys. So this is what I was talking about. The biggest cost is the drivers. They have to pay the drivers by the hour, by the trip. But if you add autonomous vehicles to that, they will have less expenses, so they're going to be even more profitable. So autonomous vehicle is going to be a good thing for Uber, at least in the short term. Right? They all have to use Uber because that's where all the users are. And we can see they're partnering with a lot of people. Waymo, Motivational, Aura, and they're even doing Fright, which is not yet profitable, and we'll talk about that later, but they're just expanding in every way they can. And the last slide I'm going to show you guys, this is a long video, we're going to get moving, but look at the growth, look at the profitability, the bookings. All right, guys, now let's get into the numbers, the financial statements. And here we're going to go over some of the red flags, the bad balance sheet, and the really high stock-based compensation. Looking at the balance sheet, I see things I like. We can see that they raised cash. They went from $4 to $6 billion. And at the same time, goodwill and intangible assets. So this is the goodwill and intangible assets are 20% of their balance sheet, but both of them did slightly go down. And at the same time, we can see that their assets have been growing faster than the liabilities. This is crucial looking into any other company, but not that much. So the assets are growing at a 12% CAGR, while liability is growing at 10. All right here is a very important slide. So there's a couple of things to point out. We can see the stock-based compensation, that is 30% of their free cash flow. It did go down. They spent $1.3 billion in 9 months on stock-based compensation, which dilutes shareholders, guys. And if you look at the net income from operations, $2 billion. So they pretty much spent more than 50% on stock-based compensation of the net income. But moving on, we'll talk about why it's not such a big deal, and I believe it will get better. I'll tell you guys right now, actually. So in one of the interviews with the CEO, he said that by next year, they want to start decreasing the shares. So how will they decrease the shares? They will have to do share buybacks, and they will have to decrease the stock-based compensation. They did decrease the stock-based compensation, but barely. And they did this year $300 million in share buybacks, which means they will do even more, which is a great thing for shareholders. And right here, we can see the three main revenue segments. Mobility went from 3.5 to $4.7 billion year over year. Delivery almost double from $1 billion to $1.7 billion, which is huge. And then the freight. So this is kind of the new segment in Uber. And it went from negative 50 million to negative 52, but the revenues are growing, just the profitability is not. But I'm confident that Uber will figure out a way to make it profitable and make it grow. Now, if we look at the operational highlights, this is amazing. This is just satisfying to look at, guys. Monthly active users up 13%, trips up 17%, revenue up 20%, and income from operations up 170%. That's huge. Free cash flow up 100% year over year. And if you look at the cost of revenue, it went down from 61% of revenue to 60% of revenue. And that means they have a gross margin of 40%. And if you compare it to a competitor like Lyft, we can see that they have a 33% gross margin and a negative 1% gross margin. And Uber has a 10% net margin, which is pretty damn good because if you look at Amazon, it has a 14% gross margin. Now, this is the last thing, guys. I know this has been pretty boring, but I have to show you guys this. If you want, stop the video and read through it. But what it says is if we fail to offer autonomous vehicle technologies on our platform or fail to offer such technologies on our platform before other competitors, if such technologies fail to perform as expected and are unfair, blah, 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 financial performance and prospects would be adversely impacted. So, and we can see right here in January 2021, they already did a merger of autonomous technologies business Aurora, which was a $400 million investment. So these guys do see that to keep their market share, they have to be the first and they have to be the best for offering autonomous vehicles to consumers. And I think they're very aware of that and are doing the best they can to be a part of that revolution. All right, now let's look at the valuation itself. Let's look at the free cash flow. So they're projected to grow their free cash flow at 30%. They're projected to reduce the outstanding shares, but for the sake of just being a little pessimistic, let's just say it stays at 0. It doesn't change. They don't dilute more, but they don't buy back. And price ratio, let's give them a 21 times earnings. I think that's kind of fair. We get a fair value of $130 and a CAGR of 30%. So looking at that, by 2027, this could be a $180 stock. Now, will it? Most likely not, but I think the upside is huge and that this stock could double to $120, $130 within 3 years. And that's why I'm opening up a position in it. And I'm going to dollar cost average, which I advise you to do as well. Never jump big, always jump big in a stock, always hold some cash so that if it does fall, you can add more. Anyways, thank you guys so much for watching. I'm currently making a video of the top 3 cheap stocks to buy right now. And that video is coming out soon. And Uber is one of them, but the other 2, I'm sure you don't know about. So subscribe and stick around if you want to see that. And thank you very much. If you actually watched this video to the end, you're a legend.